is the last exam for your CA intermediate, that is Financial Economics and Financial Management.
Is it audible to everyone?
Yes.
And today I've worn a special pullover which was given by Capsite, which is the Capsite pullover. And the reason is that C is for caps and C is for celebration. So during this exam, what happens is many of us become very, very stressed. You don't sleep, you don't eat properly, you don't do anything. And because of that, you forget that there is something to smile about. Now, your exams are there, it's going to get over. You can smile, eat, and sleep a lot. And also, what has happened is you've started sleeping very late. When we were young, we had a saying, early to bed and early to rise makes a man healthy, wealthy, and wise. The other day, I was taking class at 8 o'clock in the morning, and I told the students who were half asleep, early to bed and early to rise makes a man healthy, wealthy, and wise. And when boy told from the other side, no, sir, early to bed and early to rise makes your girlfriend go out with other guys. So now is the chance for you to start sleeping early after your exams. And also remember that don't forget to laugh, don't forget to smile. This is just an exam, it's just a milestone in your long journey of life. Now, coming to the economics portion, I am taking financial economics and I'll be speaking for it for the next 10-15 minutes. Your financial economics is a 40 marks, and we have 4 big chapters, and each of them is divided into units. So what we'll do is we'll quickly revise those 4 chapters. Santosh will read it out and I will go through it. Santosh?
Yes.
Yeah.
National income accounting and Keynesian theory of national income.
That was the first chapter, national income, which UC sir did with you all. But just as he keeps reading, I'll just give you one line for each of them. So keep reading, Santosh.
Yes, sir. National income accounts are extremely useful for analyzing and evaluating the performance of an economy. Knowing the composition and structure of the national economy, income distribution, economic forecasting, and for choosing economic policies and evaluating them. Different measures of national income like GDP and GNP, NDP and NNP, both at factor cost and market prices.
So remember, UC sir has taught you what is national income. Very important to compute the national income. You have to learn the importance of national income. Remember GDP, GNP, NDP, NNP. What's the difference between gross and net? When you subtract depreciation from the gross, it becomes net. What's the difference between domestic product and national product? When you add net factor income from abroad, it becomes from domestic, it becomes national. And the third thing is it's both at factor cost and market price. Factor cost plus indirect taxes minus subsidies will give you market price. So if you just remember these 3 things, gross to net, domestic to national, and from market price to factor cost and factor cost to market price, you will be able to do all the sums. You have a lot of sums which come from here. Out of 40 marks last time, in the last 3 years papers, you've got at least 12 to 15 marks of sums. So please remember, and this chapter carries around 8 marks or some. So you'll have to learn this properly. And remember, if they just ask you to calculate national income, without mentioning, it is always NNP at FC. That is net national product at factor cost. Okay, let's go to the next point quickly.
Nominal GDP and real GDP, personal income and circular flow.
Okay, these are important concepts which you'll have to know. Remember, when you adjust the GDP, which is the total income, when it's adjusted with the cost inflation index, it becomes the real GDP, correct or no? And you'll have to know the circular income and personal income, and also the formula for personal income and disposable personal income. Okay, let's go to the next point.
Canadian 2-sector model and 3-sector model.
Okay, this you all have done in detail with UC sir. You have to learn the diagrams for both the 2-sector and 3-sector model. 4-sector model, I have a doubt which will come, but even then you go through it. Remember, 2-sector model, only household firms and the suppliers. In the 3-sector model, you have the household firms, the suppliers, that's the manufacturers, as well as the government. In the 4-sector model, you have the households, the manufacturers, the government, and the foreign investments, which is the exports and imports. So keep this in mind. learn the different concepts. Everything should be done properly with the diagrams. Remember, the more you write the diagrams, the more you'll get marks. Okay, next point.
Public finance. Richard Musgrave, 1959, introduced the three-branch taxonomy of the role of government in a market economy, namely resource allocation, income redistribution, and macroeconomic stabilization.
Okay. So again, remember I told you the second important chapter is public finance out of your 4 chapter. And I told you that the public finance has 3. This is from where I started teaching. Remember, the 3 main reasons for public finance are allocation of scarce resources, redistribution of income, as well as stabilization of the economy. And I also told you, while allocation of resources and redistribution of income are microeconomic, stabilization of the economy, which I studied in the previous chapter, Keynes theory, the aggregate demand, aggregate supply, all those things will come under the macroeconomics. Okay, continue.
The allocation and distribution functions are primarily microeconomic functions, while stabilization is a macroeconomic function. Market failure is a situation in which the free market fails to allocate resources efficiently, in the sense that there is either overproduction or underproduction of particular goods and services, leading to less than optimal market outcomes.
Okay, now remember, now for all these 3 things, the first one is allocation of resources. And if the allocation of resources are not done properly, it leads to market failure. That means if the goods are overproduced and if they are underproduced, it is called a market failure. So market failure is the overproduction of goods or the underproduction of goods. Correct or no? Continue. Yeah, Santosh?
Yes, just a minute.
Yeah. And remember, the market failure can be supply side market failure as well as demand side market failure. Supply side market failure is when the manufacturers don't produce the goods enough, or they produce more than what is required. And demand side is when the people don't demand enough of those particular goods because of some abnormalities. Correct? No, continue reading, Santosh.
The demand side market failures are said to occur when demand curves do not take into account the full willingness of consumers to pay for a product. The supply side market failures happen when supply curves do not incorporate the full cost of producing the product. There are 4 major reasons for market failure. They are market power, externalities, public goods, and incomplete information.
Okay, now remember this. This is very, very important. The 4 reasons for market failure, that is market power, that is monopolies. If some company has a monopoly in production, it will produce more. Externalities, where, remember, there is product positive and negative externalities. When you're producing some good and it either causes some harm to the environment or it causes some benefit to the environment, it is a positive and negative. And there are production and consumption externalities. Correct or no? So when a company produces goods and let's say it causes pollution, it's an externality. And I told you 2 things, private cost and social cost. The private cost of the goods plus the cost to the society is called as the social cost. So that is externality. The third one is public goods. When there are goods which are manufactured by the government, because private enterprise is not manufacturing those goods. For example, gardens, parks, roads, highways, defense, they are called as public goods. And the last one is inadequate information. So you have to remember all the different types of externalities as well as the different types of public goods. Next point.
Concepts like tragedy of commons, free rider problem, asymmetric information, adverse selection, and moral hazard.
Okay, you have to learn these concepts. Remember, whenever you talk about free rider problem, when people exploit resources because it is free, you have a forest and people go and pluck as many fruits as possible because it's a common resource, or people dig bore wells, it is and then you have to learn about adverse selection, where they make the wrong selection because of the inadequate information, etc. So you have to learn these concepts very properly, and also learn the classification of public goods. I've not done it here, but impure, pure public goods, etc. Next point.
Government initiatives towards combating market failures due to monopoly power and negative externalities are through regulations, and also either direct controls or market-based policies that would provide economic incentives. Concepts like merit and demerit goods, and the price flow and price ceiling.
Okay, now remember, how does the government control market failure? The government controls market failure of market power. It controls by rules and regulations. You have the Competition Act, you prevent monopoly, etc. How do you control the problem of externalities? You control the problem of externalities by either direct controls, like putting a prohibition on manufacture of certain goods, putting a limit on emissions, or through indirect methods. Remember, I did cap and trade methods where you can trade. Remember carbon credits, I've explained it to you. How does it correct the problem of public goods? Remember, by producing, giving incentive to produce merit goods, giving incentives to education, etc., and giving disincentive to demerit goods, like putting a higher tax on cigarettes, etc. And proper information is disseminated by the government. So it controls all the four types of market failure. Okay, next point.
Fiscal policy involves the use of government spending, taxation, and borrowing to influence both the pattern of economic activity and level of growth of aggregate demand, output, and employment. The
Okay.
objectives of fiscal policy may vary from country to country, but generally they are achievement and maintenance of full employment, maintenance of price stability, acceleration of the rate of economic development, and equitable distribution of income and wealth. The tools of fiscal policies are taxes, government expenditure, public debt, and the budget.
Okay. Now remember this, the last topic in public finance is fiscal policy, the expenditure and income of the government. So how does the government control all this? By putting taxes, it will earn more revenue, correct? By external borrowings or internal borrowings, by the budget. And all these are done, or by public debt, by raising money. So it will control the amount of money coming in and the expenditure. And if you have a good fiscal policy, only then you can control the economy. Okay. Continue. Yeah.
Concepts like pump priming, compensatory spending, and crowding out.
Okay, now remember these also, when the government puts in little money to revive the economy, it is called as pump priming. When it puts in enough money to compensate for the lack of spending, it is called. So remember two types of policy, fiscal policy measures, discretionary fiscal policy and auto discretionary, non-discretionary fiscal policy. Also, you will have to learn contractionary and expansionary fiscal policy. So please learn all this. The concepts are lots in economics, so you'll have to be very, very careful. If you're clear with the concepts, you'll be able to do all the things. Okay, let's go to the third chapter. We are running out of time.
Third chapter, money. Money refers to assets which are commonly used and accepted as a means of payment or as a medium of exchange or of transferring purchasing power. The functions of money are acting as a medium of exchange.
So remember, I told you this, four functions of money: medium, measure, standard, store. Medium of exchange, measure of value, standard of deferred payment, and store of future value. I told you, money is a function of matters for a medium, a measure, a standard, a store. Okay, continue next one.
Yes, providing a common measure of value or common denominator of value, serving as a unit of or a standard of a deferred payment, and facilitating storing of value both as temporary abode of purchasing power and a permanent store of value. According to Keynes, people hold money.
Now, yeah, remember we did the different theories of money, classical theory, then we did the neoclassical theory. The most important theory, the Keynesian liquidity preference theory, and he said you hold money for three reasons: the transactionary motive, the precautionary motive, and the speculative motive. So I want you all to learn these particular motives and see the formulas which are given there for this chapter. Okay, continue next.
The high-powered money and the credit money broadly constitute the most common measure of money supply or total money stock of a country. The stock of money always refers to the total amount of money at any particular point of time. That is, it is the stock of money available to the public as means of payments and store of value, and does not include interbank deposits.
Okay, remember, high power money is the money issued by the RBI, the notes, the coins, the currency which is in the circulation, and the credit money is what money is given in credit. It's not given in liquid cash, right? And here you'll have to learn the concepts of money, and they might give you a sum. M1, M2, M3, M4, L1 and L2. So you'll have the different concepts of money where you'll have to learn how to use the formulas. I've not given the formulas here, but please go through the formulas. Okay. Next one. Continue fast.
Measures of money like M1, M2, M3, and L1 and L2, and money multiplier. The money multiplier is a function of the currency ratio, which depends on the behavior of public. Excess reserve ratios of the banks are banks and the required reserve ratio set by the central bank.
And I told you already, the money supply depends on three characteristics: the behavior of the individual when he keeps money. The second is the behavior of the banks, which is called as the reserve ratio, how much are they willing to keep, and the behavior of the central government. So all these three behaviors are defined by different ratios, which I mentioned over there. Okay, let's go to the next point.
Monetary policy refers to the use of monetary policy instruments which are at the disposal of the central bank to regulate the availability, cost, and use of
Okay, now
money.
what's the difference between fiscal policy and monetary policy? While fiscal policy is the expenditure in income, monetary policy regulation of supply and demand of money through the RBI. So how much money the Reserve Bank of India is getting in, how much is it printing, and there are different tools of monetary policy. So remember, the monetary policy works through monetary policy objectives, analytics, and operating procedure. I've not mentioned it there, but you'll have to go through that. Got it or no? Continue. Next.
There are mainly four different mechanisms, namely the interest rate channel, the exchange rate channel, the quantum channel, and the asset price channel.
Okay.
Concepts like CRR, SLR, repo, and reverse repo rate, and MF.
Okay. So remember, you'll have to learn the CRR, SLR, and go through the recent CRR, SLR, because the government is keeping on changing it. Repo rate and the reverse repo rate is the rate at which the government lends to the banks, and reverse repo is at which it borrows from the banks. Okay, so keep that in mind. Okay.
Fourth chapter, international trade.
Okay, now the last chapter, which is international trade.
International trade is the exchange of goods and services as well as resources between countries and involves greater complexity compared to internal trade. Theories of international trade like mercantilism.
Yeah, you'll have to learn all these theories properly. I've given you example: mercantilism, then Adams equity theory, Adams absolute advantage theory, David Ricardo's comparative advantage theory. You'll also have to learn Heckscher-Ohlin theory, and the last theory is the new trade theory. Each of them is very, very important. One of these theories definitely comes for your exam. Okay, next point.
Trade policy encompasses all instruments that governments may use to promote or restrict import and export.
Okay, so the next one is trade policy, how it ratios. Remember, I did tariff measures, non-tariff measures. So you'll have to learn the different types of tariff, compound tariff, mixed tariff, concepts like tariff rate quotas. What is the meaning of SPS, sanitary and phytosanitary methods, non-tariff measures, correct or no? Export quotas, import quotas, administrative measures. So you'll have to learn all these are way in which the government controls the entire trade, international trade, right? So you'll have to learn this up, right? Next point.
Exchange rate is the rate at which country is the currency of one country exchange for the currency of another country.
The country. So this, exchange rate. There's a direct rate where your currency, $1 is equal to 74 rupees, where our currency is the secondary and dollar is the primary. And there is indirect where it's 1 rupee is equal to $0.013, correct? So you'll have to know that. And you'll also have to know that there is real effective exchange rate, which takes into consideration cost inflation index. And last time they had also given us sum on exchange rate. So please go through that. We had discussed that when we were discussing the papers. So just keep that in mind, okay? And then
merits of floating rate and fixed rate of exchange.
This is very important. Floating rate, fixed rate. They will ask you either. Why I've given only merits? Because merits of floating rate will become the demerits of fixed rate, and merits of fixed rate will become the demerits of floating rate. And you'll have to learn hard peg, soft peg. So hard peg is you don't change the currency at all. And then you'll have to learn the difference between appreciation and when the government intervenes, it's revaluation. When it happens because of the market forces, it's appreciation or depreciation. Keep that in mind. Okay. Next.
Foreign capital may flow into an economy.
Now this is the last thing of that. One is foreign capital inflows. Remember, what are the important things? Foreign direct investment, where you invest into the infrastructure, you invest into the construction, you put in your money into the country, create jobs. Foreign portfolio, and you invest in the stock market. You'll have to learn the merits and demerits of both foreign direct investment and foreign portfolio investment. You'll also have to learn of terms like greenfield investment, brownfield investment, which I discussed, correct? So although economics portions is quite huge, if you concentrate on the important key concepts and learn them, you will do well. So keep smiling, be happy, and do your final exams. And don't forget that you all will also have to do your finals. So all the best. God bless all of you all. Thank you so much.
Good evening, students.
Good evening, sir.
Shall we start?
Yes, sir.
First of all, we have come to the end of the entire plan that we had. And we can now say that conveniently that we are in such a situation that what we expected would be a difficult situation has passed through, and we are now on the verge of enjoying the fact that examination is coming to an end, and we have done it successfully. See, I'm not concerned with the result. I'm concerned with the success in which we have given the exam. A few months back, there was a lot of tension whether exam will be there, not there. So many times it was postponed. Everything was skeptical. We were not sure. But now we have seen that when you have confidence in yourself and when you have pushed yourself to that extent, you have gone through all the difficult times, but you have not lost focus. The main thing is that you have not lost focus. You have not lost your objective. You have not lost your ultimate goal. That is to clear the exam, to attempt the exam and clear the exam. That should be the spirit with which you are supposed to attempt the exam. And I would like to appreciate and congratulate all of you for the strong willpower that you have shown all throughout the studying time, the revision time, and also the exam time. And I think that today, as Rajdeep sir said, it is a time, it is a moment of happiness, it's a moment of enjoyment that we have, yes, we have done this successfully. So you can see that the first thing that I've written here, arise, awake, and stop not till the goal is reached. But at the same time, you have come to the end of the examination, don't relax. You have got one more paper. And you have to give this paper with the same enthusiasm that you have given the last, all the papers that you have written. The same enthusiasm. Till the last minute of the examination, that enthusiasm, that focus, that dedication should not be lost, should not be missed anywhere. Do not stop till the goal has been reached. You have not yet reached the goal. You are towards the goal. Your objective, your goal is to write the last paper. Emerge successful, emerge victorious. Victorious in the sense that we have achieved what we had planned. Okay, so that is the first thing. I can understand that your time is very precious. Have faith in yourselves. Great convictions are the mothers of great deeds. Have conviction, have faith in yourselves. Trust yourself. You can do it. You have done it. All these times you have gone through. It is nothing. You have sailed through. Great convictions are the mothers of great deeds. When you convince yourself that yes, I can do it, and you have the self-confidence that you can do it, you have achieved great heights. You will achieve great heights. And I always say, what is this life if not of some little struggles that we have to face? It will only toughen us. It will make us that much more tougher. It will make us that much more stronger. And it will help us in our real life also. So we have seen actually what is real life all about. Right? So the bad moments are going down now. And we have gone through a lot of things, but now the good moments have started coming. First paper was written, second paper was written, third paper was written. Can we write the remaining group also? Yes, we can write. We have written. Then there was a pause. Second group, thinking, no thinking. Continue with the same enthusiasm. And you have done that. You have done that. and you have come a long journey. So you had conviction in yourself, you had self-belief, you had self-confidence, and that has brought you to the end of this journey. Do not go to sleep, because one more exam is there. Do not start your celebrations now. You know that one more exam and then we are free, right? So maintain that force, maintain that dedication, maintain that focus, maintain the same enthusiasm till the last paper and enjoy your last paper. And your last paper, I'm telling you, financial management is going to be one of the best papers, because we have done a lot of practice. We have done a lot of varieties of problems. We know each and every chapter, and it is very scoring also. Type of questions that are normally asked in the examination are same. They don't have any variety other than what we have done. So basically, for any examination, it is the concepts which are important, which I state from day one, concepts. And we have learnt all the concepts thoroughly. So there is nothing to fear now. We go and enjoy writing the paper. 60 marks paper. Okay. So now let us come to the topics and see what are the important areas that we have to touch upon. And let us see as to what other things that we have to do. Type of questions that will be asked in the examination. Starting with the first one. Can you see the screen that I'm sharing?
Yes, sir.
Yeah. So the topic of working capital management, I'm just touching upon the main points, the main topics where you have to concentrate. Classification of working capital, always remember that we have got 4 classifications of working capital. First of all, gross working capital, which is only the current assets, total of current assets. Net working capital concept is your total of current assets minus total of current liabilities. Permanent working capital and temporary working capital. Okay, so permanent working capital is that capital which is also called as fixed working capital. That will remain constant, that will remain fixed, it will not change. Temporary working capital, it is fluctuating working capital that changes. For example, seasonal working capital that we require. It is only for that particular season. After that, it changes. Okay. Then other things I have already discussed with you, all these points. Again, I repeat, I stress on important things that are there to be done. When you're calculating the stock of raw materials, it is on the basis of raw material consumed and not on the basis of raw material purchased. Work in progress, if nothing is given, 100% cost of raw material and 50% of wages and overheads. But if in the problem they have mentioned that this much is complete, 40% complete, 60% complete, then go as per the instruction. In the absence of information, it is work in progress, 100% material, 50% of wages and overheads. Finished goods to be taken at cost of production. And I've told you, cost of production in financial management is equivalent to your factory cost, your works cost in cost sheet. Then sundry debtors, if nothing is given, always take it at selling price until and unless mentioned in the problem that you are going on cash cost basis. Okay, very important. Creditors always to be taken on the basis of raw material purchase, not on the basis of raw material consumed. Whereas stock of raw materials is taken on the basis of raw material consumed. Okay, formulas I've discussed with you when we are doing the revision. Working capital, always check in your working capital problem whether they have asked you to calculate working capital on cash cost basis. If cash cost basis is asked, then you have to exclude depreciation. Non-cash items you have to exclude. Amortization, writing off of any intangible asset. In the calculation of what? 3 items: work in progress, finished goods, and sundry debtors. Non-cash items to be excluded from these 3 items, and from sundry debtors you have to exclude one more item, that is net profit before tax. Remember that it is net profit before tax. They will sometimes give you before tax, after tax profit. You have to take the net profit before tax and subtract from the debtors. Then concept of maximum permissible banking finance I have done with you. 3 methods are there. So first method, 75% of current asset minus current liability. Second method, 75% of current asset in one bracket minus from that total current liabilities. Third method, 75% of current asset minus core current asset minus a current liability. This particular question had been asked in one of your exams. What is the recent trend in NPBF? So that I've given you the points, what you have to write. Limits are given. Then working capital funding approach. This is a new point that not new point rather, I'm summarizing a lot of points together in this table. It is not a new point. It is something that we have already done. Working capital and risk, working capital and profitability. So working capital funding approach. Okay, just from the point of view of examination, there are approaches which are conservative approaches there and aggressive approaches there. Long-term funds used in, if it is a matching approach, fixed assets and permanent working capital. Long-term funds, matching approach. Okay, conservative approach, where you are going to have more amount of working capital, right? Aggressive approach, where you are going to have less amount of working capital. So conservative approach means what? That you are having more amount of working capital, so less is available for investment outside. Aggressive approaches that you are having less amount of working capital, so more amount of funds can be invested outside. So different forms of funding under different approaches that I have given there. Just before going for the exam, go through this table. Then we come to cost of capital. All the formulas we have to know. Two types of formulas for cost of debt and cost of preference, depending upon whether it is irredeemable debt or redeemable debt. If it is irredeemable debt, it is only interest net of tax upon subscription value. Redeemable debt, it is interest net of tax plus this I is this your interest plus RV minus SV upon N, that is RV is redemption value minus subscription value upon number of years for which the debenture or the bond has been issued upon average investment RV plus SV upon 2. Then here, always remember that in case you are having corporate dividend tax, then in the case of preference shares, you will be multiplying here by 1 plus DDT. And here also, this preference dividend will be multiplied by 1 plus DDT. Okay. Then in case of equity capital also, I'm repeating, equity capital also, in that case also, if dividend, the corporate dividend tax is given, wherever the dividend is given, you multiply by 1 plus DDT. Why I'm not writing? Because normally it is not applicable. But in some cases, it may be applicable. Even for this formula, the dividend has to be multiplied by 1 plus DDT. If the dividend distribution tax is given, whenever you are calculating equity dividend, preference dividend, multiply by 1 plus DDT. Okay. Growth rate formula, where growth rate is not given, check. Growth rate is not given, check whether company is having retained earnings or company has made a fresh issue. Growth rate is not given and these 2 points are coming. One of these 2 points are coming. Either you are having retained earnings or you are having fresh issue. Then calculate the growth rate by what formula? B into R. Calculate the growth rate. Sometimes they purposely don't give you the growth rate, but they will give you information in the problem that the retained earnings are there or there is fresh capital introduced. CAPM formula will be a straightforward formula. They will give you all the details. You just have to substitute. Cost of retained earnings, either it is equal to cost of equity in the absence of any other information, or where they have given you personal rate of tax and brokerage, then you have to multiply by 1 minus personal rate of tax into 1 minus brokerage. Problems based on weighted average cost of capital are very important in the examination. Concept also is very important. Capital structure planning, points that you have to remember. First is assumptions of the theories, common assumptions. You know, every time we used to write common assumptions. 6 assumptions, 3 relating to balance sheet, 3 relating to profit and loss account. I maintain the same format so that it becomes easier for us. As and when the theory changes, we will add additional points. And this additional points for MM theory becomes very important. So for MM theory, sometimes they ask you to write only the theory question is asked to write only the assumptions of MM theory. 9 points you have to write. Common points, 6 common points, and 3 additional assumptions of MM theory. Then all the formulas that we make use of in the theories. Then given 2 or more financial plans, we have to select one financial plan which is optimal. They will ask you to find out which is the optimal plan for the company. What you have to do, you have to find out the highest EPS or the highest P ratio. Whichever plan has got the highest EPS or the highest P ratio, that will be the plan that is to be selected. Indifference point analysis will come. Okay, indifference point analysis. Given the indifference point, calculating the EPS, or given the EPS, calculating the EBIT or the indifference point. These are the two types of questions which are there in indifference point. Financial break-even point, they ask you as a question. First theory question and then also as a practical question. Financial break-even point, that point where the profits earned are just sufficient to meet the fixed charges. And what are fixed charges? Interest and preference dividend. You normally students forget to mention preference dividend. Arbitrage process, important because MM theory is important. So what is the arbitrage process? That is important for us. Then interpretation of EBIT EPS indifference point analysis. If the EBIT is below the indifference point, then what? If the EBIT is equal to indifference point, then what? If EBIT is above the indifference point, then what? In simple terms, the entire thing for this is that if the EBIT is above the indifference point, then we can make use of more of debt funds. If it is below the indifference point, then we have to make use of more of equity funds. Okay. If it is equal, then we are indifferent to the type of financing. That is a summary of it. Then we have leverages. Simple questions can be asked on calculation of different types of leverages, or they can ask you to calculate, to find out the missing items given the leverages. Okay, so those types of questions will just go through the formulas of leverages. Capital budgeting, again, all formulas you have to keep in mind. Now, one very important thing in capital budgeting that I want to tell you, this part. And when is this part important? When the projects which are being compared are having different lifespan. If you are calculating NPV of two projects, they ask you to find out which project is more profitable. They ask you to find out which project is to be accepted. And you are asked to calculate NPV. Don't calculate NPV and leave the answer there. Purposely, they will ask you to calculate NPV and state as to which project is to be selected. And life of the project is different. So you will calculate the NPV. But after calculation of NPV, you will write a statement that since the life of the two projects are not same, we cannot compare the NPV of the two projects. Therefore, we calculate the EAC. Okay. Then profitability index method, internal rate of return. Whenever question is asked in the exam on internal rate of return, I give you the word of caution. Do the question last. Do the question last, because trial and error. Sometimes you get stuck with that. Sometimes trial and error goes up to 35, 38%. So if IRR is there, keep the question for the last. Okay. Simple questions are working capital, cash management, receivables management, in that factoring. All these are simple questions. Attempt these first and try to score your minimum possible marks. And you can, all these questions, we are having so much of practice now that you should be able to solve every such question in 10 minutes flat, 10 to 12 minutes flat. So there should not be a problem of completing the paper. Paper is going to be very simple, and it is such that your flow of thoughts will always be there. You are going to find every question, this we have done, this we have done. So concepts are very important. Don't go for the nature of the question. We have done all the concepts. We have done all the concepts. Receivables management. The four costs you have to remember: ABCD and the COCD. ABCD, administration costs, bad debts, collection charges, discounts, wherever given. Subtract that from the gross profit to get the net benefit, and also minus the COCD at the end. Problems based on factoring. What is factoring? Types of factoring: recourse factoring, non-recourse factoring. Okay, important from this particular topic. Cash management, objectives of cash management. Why we have to hold cash? Motives for holding cash. Motives for holding cash. Certain transactions are always to be in cash only. Okay. Then precautionary motive, speculative motive, contingencies, purpose of holding cash. Very important question. Bauman's model, we can have this as a practical question. Miller or cash model, it is a theoretical question. This, everything that is theory has been covered in my important theory questions, which I've given to you at the end of your material, CAPS material. So it is there to check that Miller or cash model has to be done from the theory. Dividend policies, basically nothing difficult will be asked over here. It will be basically all questions on the basis of formulas. So formulas you have to know. Traditional position, it is price is equal to multiplier into D plus E by 3. E is your earning per share. D is your dividend per share. Walter's model, this is the formula. Alternative way of writing this is D plus R by K into E minus D upon the whole thing upon K. Common denominator we take. Okay. Then we have Gordon's formula. E into earnings into 1 minus B, that is 1 minus retention ratio. 1 minus retention ratio is dividend upon KE minus G. Okay. Then in Miller-Modigliani approach, approach, 3 formulas you have to know. That is 3 calculations you have to know. Current market price of a share will be equal to the present value. What is 1 upon 1 plus K? This is the discounting factor. This is the discounting factor. Into what you are discounting, dividend at the end of the year plus market price at the end of the year. So calculating the current market price. P0 is what? Current market price. Formula is what? 1 upon 1 plus K, present value of dividend plus market price at the end of the year. Second, they will ask you to calculate number of equity shares to be issued. Additional equity shares to be issued. For that, you require this part of your approach. MP1 is additional shares to be issued. P1 is price at the end of the year equals to investment minus into bracket E minus ND1. E minus ND1, ND1 is the dividend paid. From the earnings, how much dividend you have paid? That is your they will ask you what is the present value of business. Okay, then John Lindner's view is given. Only study the formula, forget all these things. Only study the formula. They will give you all the details. You have to just fill up the details in the formula. Problem is over. Nothing much is going to be asked on John Lindner's view, excepting the formula. But don't forget the formula. Risk analysis. We have done all types of problems based on risk analysis. First method was RADR method. So cost of capital plus the premium that we are going to calculate. That is going to give us RADR. Second is certainty equivalent methods. We find out the certainty equivalent factors which are given. We multiply. We find out the certainty equivalent cash. And then we multiply that by, very important, we multiply that by risk-free rate of return. They will give you market rate of return. They will give you risk-free rate of return. Purposely 2 figures are given. You have to multiply by risk-free rate of return. Why? Because we have removed the uncertainty here. Okay. Then the sensitivity analysis. And last, what I want to do is, I want to tell you what is the nature of questions that are normally asked. Typically in the examination, what you can expect. Not that it will be asked in the examination, but typically what is your paper based on? It is based on introduction. That is, in introduction, what do you have? Theory questions which you have to revise before going for the exam. Just give one reading to this and see whether you have covered all these things. Wealth maximization versus profit maximization, first topic. Okay. Factors affecting working capital requirements. Motives for holding cash. This I told you just now. MPBF. Operating cycle. What is operating cycle? The time period which is required from the date of purchasing raw materials and converting into finished goods and then selling it and converting back into cash rate. Then functions of financial manager, first topic. Factoring, receivables management. Seed capital assistance, bridge finance, all these things I told you. Out of this, one question is bound to come in every paper. That is sources of finance. Okay, ADR and GDRs. So out of this, we can expect one or two questions. Sometimes more than one is asked. 1 or 2 questions are normally there in every paper. Then arbitrage process of MM theory. Pecking theory. I've got this in my theory notes. CAPS material. Check. Indifference point. Concept of indifference point. Factors affecting dividend policy. Different types of float. This is also there. Okay. Time float, mail float, all these things are there. So this was asked in one of your papers. That is coming in cash management. Okay. Then what are the types of questions you can expect in the examination? Topic of ratio analysis. Favorite of examiner. They ask you to calculate the different ratios. Or they give you reverse ratio problems are there. They give you the ratios and ask you to fill up the balance sheet, missing items of balance sheet, missing items of trading and profit and loss account. DuPont analysis of returns on investment, returns on equity, returns on asset, DuPont analysis. This comes in ratio analysis. Then working capital management. These are all practical questions that I'm talking about, problems, practical questions. Working capital normal problems come, but in 1 or 2 papers, they have asked you to calculate working capital using operating cycle. Be careful, read the question very carefully. They don't give you balance sheet. Normally, we calculate working capital from balance sheet, current asset minus current liability. This is from working capital operating cycle to operating cycle. They will give you revenue statement. Then working capital on cash cost basis. Preparation of cash budgets, very simple. Float management. Float management is frequency of banking. The question that will be asked is frequency of banking. How many times we have to deposit the money into the bank? How frequently? Whether it is once in a week or twice in a week or thrice in a week. That type of question can be asked. This is in cash management. Then Baumol's method, that's square root type. Evaluation of credit policies type of question. Factoring to be adopted or not. Whether service or factor to be accepted or not. Effect of changes in working capital on profit. How the changes, increase or decrease in the working capital is going to affect my profit, right? If there is more investment in working capital, the profits are less. If there is less investment in working capital, the profits are more. So that you have to show with the help of solving of problem. Leverage analysis, calculation of the leverages, reverse problems. Given the leverages, finding out the missing items in the revenue statement. Cost of capital, this will come as a combined question. Calculation of specific cost of capital and the WACC. Then debt versus equity, financing policies are given. You have to find out which of the plans will be more suitable. The one which is having debt will be more suitable on this. Then EBIT, EPS indifference point analysis. Capital structure theories, net income theory, net operating income theory, based on that. Then calculation of all these things in one particular problem. One single problem, they will ask you to calculate all these things. If IRR is there, again I mentioned, keep it for the last. NPV based evaluation. Evaluation of mutually exclusive projects with different lives. Again, I'm stressing on this. Whenever you are having different lives of the project, NPV method, do not comment until and unless you calculate EAC. Capital rationing problems. Capital is divisible, capital is not divisible. I've done those types of questions. Important, asked in the examination. Calculation of MIRR and IRR and stating whether both of them give the same result or not. These are the type of questions that you will normally find in all your FM papers. Okay, so don't worry, your papers are going to be absolutely simple. Whatever you have done, only the same type of questions will be asked. Application of your knowledge is required now. Do not take tension. It is your last paper. Last paper. Enjoy writing the paper. You will find that everything that you have done, you have practiced over this last few months. The same type of questions are asked. In fact, you will be bored writing the same solution over and over again because we have done that much type of questions in the class. Okay, so you will enjoy writing the paper. You will be finding that similar questions are asked. Paper is very simple. Time yourself. Certain questions, when you see, you will find that these are very simple questions. Don't become overconfident. Think properly. Think logically. Okay. So with that, I conclude my lectures and wishing you all the best for your last paper. And after that, enjoy, have a blast. Go to sleep first. First thing, you have lost sleep for all these days. First thing that you do is after writing the paper, go to sleep. Next day, you start your enjoyment. Okay. Thank you. All the best.
Thank you, sir.
Hi everyone. Hi, can you hear me?
Hi, sir.
Hi. Thank you. Thanks to all the faculties, including the today's speakers, Dr. Radip sir and Prabodh Naik sir. Thanks to all the faculties on behalf of entire CAPS R2R team. And obviously, thanks to each one of you, including those who viewed us through our YouTube channel also. Thank you very much. It is a resounding response. I think maybe in total, more than 5,000 people have watched. In total, maybe similar, but in total, more than 5,000 people have watched these sessions. It's really nice response at intern and final level, I'm telling, in total. Thank you so much. I'm sure it would have been useful to you also. One small request from all of us. We have made one small feedback form for the R2R session. So we suggest you to please fill that feedback form. So can someone share that feedback form in the? Yes, it's already shared in the YouTube as well as Zoom. Please, it will take 30 seconds. It will definitely help us for improving. And who knows, by filling that, you may get 1 mark extra, 2 marks extra. So fill it, because when you got the benefit from us, we also want to know how useful it was. It will be great if you can fill it up and submit today itself. Thank you very much. And the last exam, so we require 6 in the last ball. And FM and economics is the one subject which in the recent past was reasonably easy. No doubt classes have happened well, revision class happened, R2R happened. You can score. So my suggestion, hit a 6er. So prepare extremely well, but sleep again. Very important, because some people do the stupidity of, oh, last exam ke baad so jayenge. Nahi hoga. Examination hall, you should be having a free flow of thoughts, free flow of mind, which I reiterated. All of you sleep reasonably well, 6 hours, 7 hours, 8 hours, whatever you want to sleep well, but prepare, okay, prepare extremely well and hit a 6er. Aim at 80 plus, 90 plus, 100, maximum you try. So if you get 80 plus, who knows, other 7 papers, even if you get between 40 to 45 or 50, you'll pass both the groups, isn't it? Okay. So congratulations in advance to all of you. All the best. Thank you for being a part of this wonderful journey. God bless you all. And all friends, maybe next week sometime we can have a Zoom meeting. Once your exam is over, we can have some relaxation, chill out session also. I'll call for a meeting. 1 or 2 days you relax, okay, and chill. Now, so just to relax you, I'll be sharing one small video. Just relax and chill. Congratulations to all of you. God bless you all. Keep rocking, keep enjoying. Just 1 second. Yeah. Don't try to do the education in the yoga way. The things are happening now. You're able to see?
Yes, sir.
Yeah.
Yes, sir.
See, when people try to copy things. ಗೊತ್ತಾಯ್ತಾ ಏನಂತ ಅದು? Don't try to copy things. That lady is standing and doing it. This girl is thinking it is actually on the flat ground. She is doing it. Okay. Anyhow, just for fun. Okay. Relax. Okay. So congratulations in advance. Thank you one and all. God bless you all. Keep rocking. Keep enjoying. Okay.
Yes, sir. Thank you, sir.
All the sessions were useful. All R2R sessions were useful.
Yes, sir.
Okay. Okay. Enjoy. God bless you all. Thank you. Bye, boy. We'll meet you after the. So till the examination, don't relax. So relax means actually, oh, last exam will say chill. So relax as far as sleeping is concerned. All those things you follow. But exam you have to take. So take the exam seriously. Till Monday 5 o'clock, you should be in a full josh. Okay. 100 on a FM and economic. That's the way you should prepare. Keep rocking. Keep enjoying. God.